Hello everyone, this is Jiarui and Siyu Chen. Our topic is partisan conflict, political insurance, and corporate bankruptcy risk. For introduction, based on what we collected, partisan conflict will lead to policy uncertainty, and those with high uncertainty often experience higher capital costs. At the same time, political connection is believed to offset the negative impact. However, there remains a gap in exploring how the conflict directly affects the bankruptcy risk of firm and the role of political connection in it. In order to make it more reliable, we used the non-financial firms in the United States over 23 years and employed panel models and PSM estimation for tests. Next is hypothesis. We made two assumptions here. On the one hand, we expected partisan conflict is positively related to bankruptcy risk. On the other hand, we assume the political connection negatively moderates the association between the conflict and the risk. Next, I will talk something about the data. Actually, we get the data from four sources, including SMOT, Comstat database, Open Secret, and the WDR of World Bank. Merging this data set lead to a final sample of 53,000 from year observation.
For methodology, our main regression model examines partisan conflict's effect on firm bankruptcy risk using the equation as you can see in the slide, where AZ score is the Altman Z score measuring bankruptcy risk. The natural log of PCI is a partisan conflict index. For FC, MC, and FE are control variables. Then we extend our analysis to examine the moderating role of political connections with two models, incorporating PACC and lobbying expenditures. Equations are as follows. Our result in Table 1 shows that partisan conflict increases bankruptcy risk. The coefficient for the natural log of PCI is negative and significant at the 1% level across all models, remaining robust after controlling for variable factors. Table 2 confirms that both PAC contributions and lobbying expenditures mitigate this risk, showing that political connections serve as an effective insurance. So in conclusion, our study provides the first empirical evidence that partisan conflict increases corporate bankruptcy risk, particularly for smaller firms. Also, political connections are as an insurance mechanism. However, the economic cost of partisan polarization are unevenly distributed. Future research should explore international transmission effects and alternative risk management strategies. These are our part of references. And thank you all for listening.